All right. Hopefully this time it's a lot better. Um, I know there was some connectivity issues, so I had to restart the stream. But all right. So to recap what I just said in the first few seconds of the last broadcast, um, so SPY has been leveling off. It's not really pushing higher. It's slowly pushing higher, but not by much. And this is something to be kind of careful of because if we don't have any strength to keep on pushing, we're probably gonna dip. And as you can see, I do this support level, and so I think it might come back and retest, 400. Um, I initially thought that this little dip right here back on the 20th was going to be the start of it, but um uh, you see it was just leveling off. um and if we just slowly creep up higher, that's not enough strength to keep us holding these levels. I think it's gonna eventually fall back down, um retest 400, and then from there we'll see what happens. My That's my estimate or my guess of what's gonna happen. We're gonna come back and test this 400 level. Um, and if it gets pretty ugly, we could probably even see it go lower, back to maybe 380, 370. But um, let's just see what happens. This is just what I've noticed, that it just sort of leveled off. And something to be careful of. So when we see it slowly creeping up like this, it's not a good thing. Um, we want to see it continue to move up on strength, with a lot of strength, and that's not what we're having. Um, right, let's take a look at Tesla. Tesla had earnings yesterday. It was a really good earnings, because the estimate was only about 43 cents, and the actual earnings report was actually 93 cents. So, like 50 cents more than what the estimate was. And that's a huge beat. That's a 50-cent per share beat. Um, so by all means, that was a very good earning report beat, but unfortunately it went down. I mean, which is it's not a bad thing. It's actually a really good thing, because if you think about it, it's a good company that beat earnings report. So what you should be thinking of as a trader, as an investor, as a whatever, a person that is interested in the market or the market of Tesla and EV, is that, hey, if this is a solid company that has some value, and it's going to continue to produce value. They have earnings that they're continuously increasing upon. And so what you should be doing is, as these stock fall in price, you should be thinking to yourself, hey, this is actually a really, really good investment, or a really good thing, because this stock is on a deal right now. I should be looking to buy. I should be looking to buy some more. And if that's not the case, for you, and you're not thinking like that, maybe you should start just considering it, because we're looking for companies that have value, that have increasing value, right, over the years. And Tesla is one of them. It's actually, and it's also a good thing. It's a large cap company, blue chip, that will continue to produce. So I think it's a very good thing, that it fell. You know, if you aren't already in Tesla, now is probably a good time. And I drew out this support level, was a resistance support level here. You can see this used to be old resistance, now it's being used as support, which is very good thing to see. And when you see this means you should probably be looking to add on to your position, or if you don't already have a position, put something new on. And it's definitely something that you want to look into and consider. So definitely do that. Um, and it's very good at. So on the long term, it Tesla does look pretty high, but if it can hold these level, I think it's just nearly gonna. trade in these ranges for a while, and then the memes will catch up. Or if something really bad does happen, Tesla could fall. Um, and but it's going to take something huge to completely take Tesla out. It's a really big entity in the market, and a lot of people really like it. So just keep that in mind. Um, all right, so Tesla fell, but it's a good pickup. Let's see, have, have Apple. Apple's been doing pretty well. Sort of level off too. Not so much strength. Um, just like how I said it in Spy, it's just slowly creeping up. And you see it sort of leveled off at this 30, 34, 134, 135 level. And unfortunately, it's not, doesn't seem like it's pushing any higher, or it wants to, but it doesn't really seem like it's pushing higher. And when we do see something like this, we want to be careful, because if it does push higher, uh, with not enough strength, very high chance of it dipping, which is definitely not a bad thing, because it needs to dip back down to for people to re-enter, people to rebuy into it, and uh, it could be a good thing for you as well, right? Because you always want to buy a little lower, so that you have more room to make, or more profit to make on the upside. So if Apple does fall, look for it around the 130 mark, 130 to 130, 125. Around that range is when you want to get in, or where I would feel comfortable getting into. And Tesla, not Tesla, but Apple, in the stock that it is, the powerhouse that it is, like, it'll continue to produce. You just have to be a little patient with it. Big blue chips like this, they can afford to make a lot of mistakes and still be okay. Still come up ahead, because they're making money no matter what through their products and everything, and they have a lot of market share in the smartphone business. So right now, the only way they can continue to grow, or the way their stock is continuing to grow, is that so many people are holding um shares of it, right? Shares of it, as in, it might not be just straight up shares, but it could be through like a exchange traded fund like SPY or VOO or any part of the index. So they always have that to help it grow. So all the people that get their enrollment of their 401k or their retirement plan that's automatically distributed, uh, a portion of that is going into Apple. So that's what's helping it grow. So slow, it's slowly creeping up. Probably it's gonna probably dip. Um, it's not much strength right now in Apple. Okay, and now to AMD. AMD had its earnings today. The earnings was really good for AMD, because the estimate earnings for them was only 38 cents, and the actual earnings was actually 52 cents. Um, so that's a huge win for AMD. Um, around 20, um, 20, but around, what was it, 15 cents or something like that. So 15 cents per share of profit. Very good. Um, Actually went up after hours. This doesn't show it, but if we look at the hourly, you can see this is from earnings. So it just climbed, it finished the day at 85. And right now, currently, even though it's aftermarket, the price is still updating. It's pushing 89. So that's a pretty big gain for AMD. But also look, it's been playing around in this range for a while. This range between the 90 and 75. And let's see what it does when it approaches 90 again. This time, maybe gather enough strength to break it. And, so it's been range bound for a few months, since August of last year. Let's see if it has enough strength to break 90. Now, it would be it would be very very good thing if it can. Um, I'm not exactly sure if it can, but I have high hopes for it. AMD is definitely something that's really good to buy into. Okay, so AMD. Let's look at this one. Skills. This one went crazy. Still went crazy this week and Friday and into this week. So you can see Wednesday of last week, it started at just $12. Now it's breaking almost, at its highs, it was at 20.75. But it broke over 20 and it's staying around 20. And that's pretty good, for 1, 2, 3, 4, 5 days. That 5 day move is pretty good. And I think it's gonna continue doing this for a while. Just if a stock gets hype up, this hype dies down really, really slowly. Even though it retraces a little bit, like you see here, there's a little hype, and, it dies down a little bit, and then it gets hype again. Because people will be interested in buying it lower, right? Nobody wants to buy higher, but if it levels off, and if it levels off like this right here, and it can hold the support, hold a new support, it'll push higher and eventually, hopefully, it goes back and retest this all time high right here, 46.30. Um, but let's see what happens. For sure, it would be a great thing if it retests this, but we also have to keep in mind that this might not happen. It could be wishful thinking, but you know, there's no way for us to really know. We can only The only thing we can really do is just manage our risk, stay in the position, and try to stay in that position for as long as possible. So the daily chart doesn't look as good, but it's a slow start, and, and it's starting to look very good again. Um, what found, or what I was looking at when I got into my position in skills, was the weekly and the monthly. You can see, this is a pretty new stock and it's holding a really good pattern so far. And I'm hoping that this continues to go forward. And that's all that I can do. I can only manage my risks and get into it and uh, hope that it continues to hold. There is there's nothing really to it. It's just getting into it and then seeing what happens. Um, so that's all that I can do. Okay. Let's see what other position. So as I was mentioning, I started to get into golf, and so what I ended up doing was I actually looked up a lot of the golfing related stock, and this is one that I decided to get into. I decided to get into Callaway, and unfortunately, seems like I'm having Facebook is having some connectivity issues tonight, so hopefully this ends up going somewhere. If not, um, I might have to just give them my Facebook uh, link to it. So let me hold on. Let me give everybody a link to it so that they can join us on this live. So everybody bear with me. So let's see. Let's share this to the other group. All right, all shared. Hopefully, people join us. If not, let's continue. Okay, so so this is Callaway. I noticed that this stock has been doing really well. Um, the last few years. Um, Definitely, it is pretty high right now, but I think it's a really good pickup, especially something that will is in an area of my interest. So I want to continue to add on to this position. Even if it goes down a little bit, goes down to 18 or something again. I'm fine with that. And I also taking a look at the premium that I will receive. So what I did was instead of buying shares, I went ahead and sold a contract, the 30 the 30 strike contract for May 21st. And what that allows me to do is basically I wrote a contract for somebody out there in the world, and if by May 21st, if the price of ELY or Callaway is below 30, then I have to buy the shares for $30 a piece. But for for me giving them that power, they also paid me a premium. And for that position, I think it was like somewhere in the like $200 to do that. So that actually brings my cost average down because I get $200 on top of that, and then uh, so that helps with the cost average, right? So that makes my cost average of each share be at only at $28 instead of you know yes, the contract is for $30, but with the premium that I receive, it's at well, what I pay out of pocket is closer to 20 $28 per share. And so it's a way to just basically buy time, give them that power. And then I sit in my position, or I sit in it. And if it goes above 30, I don't have to buy it, but I win a free $20, not $20, free $200. And, I could keep doing that until I get the shares, because worst case, I get the shares at a higher price. But with the cost average and everything, I'm okay with it. The stock is close to $30. And so that would drive my cost average down to $28. So I'm still winning. So it's a win-win situation for me. And so for me, I don't view it as a loss at all. It's actually a win. So so this position, I wrote a contract out, and I hope to I hope that it continues to perform well. Um, so I see that there's two people that's joined me tonight. I was having some issues, or not me, but Facebook was having some issues with the live stream, so I had to just give everybody the YouTube live link. So if you're just joining me, it's probably just through YouTube, and I'm just going over my Callaway position. Callaway is a stock, is a golf related stock, and I was just explaining how what I'm doing in that position. So I got so to recap, I sold a put, basically giving somebody the rights to sell to me 100 shares of Callaway stock at $30 a piece. For that, they pay me $200 ahead of time, and that drives my cost average. If I were to buy those shares in the future date, um, that makes it so that my cost average is closer to 28. And right now, it's a win-win situation for me because I get to buy, and my cost average is around 28. The stock is going for 29, almost 29.60. So I'm winning so far. And if it goes above 30, I still walk away with $200. So pretty good for a low cost stock. Uh, so that's just something. So this is goes back one of my posts the other day. It was about how do you pick any stocks to play, right? So basically, there's stocks for everything, anything that you could be interested in. Just look around, So for me, golf was something I recently picked up, and I was interested. I was like, yeah, okay, let's see if there's any golf related stock, and if there is, let's try to invest in something, right? So it's kind of like getting paid to play, getting paid to play golf, right? Eventually, I'll get to the point where my golfing pays for itself through investing in the shares. So it's a win-win for me, right? So that's one of my positions that I just recently opened this week too. I started that position on Monday, which is yesterday, and already up 12% on those sell puts, which it's not much, like $25, but that's $25 that nobody's gonna give you, right? Okay, so let's take a look at another position. NVIS Microvision. Microvision has and hyped up this week. You could see it had a crazy 2 days, 3 days run. Last Friday, it was sitting at last Friday it was sitting somewhere in the under 15, right? Under 15, and then it just took off and it just kept going. Today was actually a dip in the stock, but it's still pretty good. At its peak, it reached $31, which is really crazy. Stock, if it gets hyped up. And this is what I mean when I tell people that you sometimes you have to take a little risk like this, but make sure it's a calculated risk ahead of time. You don't want to put too much money into where you can't afford to lose it, but you also have to take some risk sometime, and that's what we did. Well, I did in this position, right? So this position, I got it closer to down here, around 15, and I said, hey, if I lose, I'll risk 2% of my account, right? And so I size myself. So if all the shares that I'm owning, if it goes down, we only lose 2%, which it never did, never happened that way, and it just kept going. So and it this little hype that caught up. I'm hoping that if it does dip, come back down to 15, that it continues to hold 15 and it continues to go higher. Because I have high hopes for this stock right here. It's a really explosive stock that could, if it really catches another hype wave, that this thing's gonna go. And I think the technology some really have some headway, especially since one of their clients is Microsoft. Microsoft is huge, and the looming rumor is that Microsoft could end up acquiring this company. So it's one stock to keep an eye on. Right now it's really cheap, under $20, and it's been performing pretty well lately. And I hope that it continues, because if it continues, I could see this stock being easily worth 50 uh, within the next 2 years or something. And if it does really well and the hype gets up, it could just all of a sudden just never look back one day. But we never know. But keep in mind, this is a really speculative play, meaning it's really, really high risk, but also really, really high reward. So don't just like jump into it without doing your risk analysis. Just don't jump into it because I said so. Do your risk analysis, see if it's something that you are willing to play and willing to play and lose on. Because if you can play and lose on it, then you don't have the fear uh, of losing money or losing out on something. Right? Calculate that all ahead of time, get in, and then just stick with the trade. Because the only way for you to make money in the market is if the value goes up. And if you get good enough, you want to hold it for as long as possible because the longer you hold it, the more it can go up. So yeah, keep that in mind. And as you play this stock, this is really explosive stock. You can see this last year performance. It went from $2, shot up to $9, went and then it dropped down to 5, and then it shot up all the way to 20 again. So that's a lot of movement in this tiny stock. So do that. You could do really explosive stock like this, have really good premium. So you can do is you could sell put to get yourself into a position at a time. That way you're getting paid a premium. And then after you sold those puts and you get assigned those shares, right? Or if you don't get assigned those shares, you continue to collect premium. You keep doing that until you get assigned shares, and then you stick with the shares and you sell calls against it. You do the other side, you sell calls against your shares. And for a stock that of this price, it has really good premium. You know, right? If you were to pick up 100 shares today, it'll only cost you $2,000. Or you can go right ahead and sell the $25 put, or even the $30 put, the $30, I mean, calls, right? The $25 calls or the $30 calls. The $30 calls is going to net you like a $200 win. And plus, if worst case, it gets called away, right? You get your shares get called away, you have to sell it for $30. That's a $10 gains, right? That's 50% gain. So that's really good. That's a win-win situation, right? And if it so happens that the stock continues to fall in value, what can you do? Well, because you sold, somebody paid you $200, so you're covered all the way. It's from current price. You're covered until it gets to 18, right? Once it gets to 18, if it continues to fall, maybe you sell another one. You go another 30 days out. You sell another one, or 30 days from May 20, right? Sell another one, and that will help drive your cost average down. And if it falls indefinitely, yes, you will lose some money, but that you have to also know when to cut it, right? So the cover call is a way for you to recoup some loss, keeping in mind that someday in the future that stock is going to go up, right? If it falls forever, you have to cut it eventually. So that's one of the positions that I'm in. I really like the stock. Been in it for a while. Uh, but do your research before you get in. Don't just take my word for it. Another stock that is pretty low that I have a position in that I really like also is POWW. And POWW, and this is kind of evil in a way, but some way we have to make money in the market. And I mentioned this time after time. Every time I come on live and I talk about POWW, is that this is a democratic presidency that we're in, and when we're in a democratic presidency, gun related stocks, ammo related stocks, anything, it fits their agenda to try to do gun control. And when that happens, everybody fears it. Everybody will stockpile arms and ammunition. And what does that do? That causes the ammunition and gun related stocks to go up. And you can see, it's holding right here. It's holding $7. As it's holding $7, it only will go up from there. Well, if it goes down, of course we're gonna cut. So but right now it hasn't gone down yet. If it goes down below, I originally purchased this around $6. So if it goes below 550, I'll cut this position. Just to save me some time and a little bit of money. But I've already collected premium on it like 2 or 3 times. Um, so you can see I sold put for the $10. I collected somewhere around, I think it was like $200 or something per. So I collected some. I already collected some for April. Um, I have April. I think I'll have all the way up to June or something too. Um, so collected twice already on it. So it more than enough to pay for itself already. The shares. So I hope that this stock does continue to go up, and if it doesn't, I get stuck with the shares, which isn't bad because I want the shares. Okay, so that's POWW. Stock's doing pretty good. Just it's a slow stock, but once it catches traction, it'll go again. We look at the past year's performance, and went from $2 to almost $10 from the last year. So if this pattern continues to do itself, I think it's gonna break $10 again this year. It's gonna go back and test $10 again. Um, and the so $10 is $3 from now. $3 from now that gets you probably roughly 50% return, close to 50% just on the shares. All right. A stock that I got in yesterday, Photo Labs. Labs is 3D printed, 3D printing related. It's a very interesting field, something that I'm interested in. I think there's a lot of applications for 3D printers. Um, with that, if you believe that EV and space exploration is the future, which there's already a space exploration related ETF. I don't know if you guys heard about it. It's a ARC X. Um, that it's set up by Kathy Woods, and she made a she made that ETF, exchange traded fund, around the idea of space exploration and space related stocks. So if we believe that uh, the future we're gonna continue to explore beyond Earth and into outer space, you know, uh, 3D printing is going to be something that is going to be pretty interesting in it too, especially since the technology is really growing. They're starting to 3D print metal components now. They have metal filaments that they're using, and that's something that we're gonna grow from. And what that allows us to do is, instead of having to carry all the equipment, because right now, if they're gonna go into outer space, they have to carry all the equipment up there with them, right? Instead of having to carry all that equipment, they can carry just the 3D printing uh, equipment, right? And go up there, and then up in their space station, the NASA space station, they leave it there, and eventually they'll build like their space station full of 3D printing stuff, and they can print up their tools, they can print up whatever they need to sustain a life out in outer space. So I think that's where it's going. Now that is the hopefully that is within my lifetime. If not, that could be I mean, it could be something that happens within the next 20 years. It could be something that maybe takes the next 40 years. So within my lifetime, I'm hoping it gets there. But especially since this stock has been getting hit, and just the pattern of it, right? This is probably will probably if I miss this opportunity, I'm probably never gonna get it again. So I start the position now, and in a few years time, if it just continues to go up, the highest was 286. I eventually get it. So right now it's at 115, which is good. I got in around 112, 111. So it's very good for me. Um, if it goes even lower, I'll continue to add to the position if I'm lucky. If I'm not lucky, it continues to go up, I'll slowly add on to it to get to my final size. But you can see this pattern every time it gets to 50, you know, even if it dips down below there, eventually comes up and it gets higher. So it's making these higher highs. So that's what I'm hoping for within the next like 5, 10 years. And in that time, I will be collecting some premium. It's a $400 stock. It's also really good premium. So um, I'm kind of conservative. So I'm gonna be looking for these strikes. So 135, 130, 140, 145 if possible. So anywhere between 200 to 200 that I'm gonna be collecting per month per 100 trade per 100 shares traded or being held by me. It's not much, but as the stock grows, that premium is going to grow too. So eventually, if it gets to $300 stock again, could be in the somewhere in the $400 to $500 that I'm collecting for per 100 shares. And we just continue to go from there. So, you know, the time to make money is when the stock is really beating up, especially something that's you can you think that has a future, right? It's gonna stay around. So I believe in it. I like the technology. I like 3D printing. That's why I got it. Uh, that's the whole reason behind it. It's also really being down. It's a sector that's really being down. So I'm gonna take my chances, get into a get into a position, hold it for the future. It's, that's how you were gonna make money. Is not by getting something that when it's already up so high. It's more, learning what stock is good when they're really being up, and then just taking it from there. So that's what I hope I can get. QS. That's like QS. QS is trying to make it back. Uh, See, it's actually way below this range that I drew. It broke this range back on the 14, but I'm hoping that it comes back. Sense, or are you asking me which one is better? I mean, I don't know too much about it, but we could take. Uh, I mean, you're kind of asking about penny stocks, so the true answer would be none. To be completely honest with you, if you were to pick between the two and you're putting some money into it, the complete honest answer to you is none of them. Because it's a penny stock. If any hype that it gets will eventually die off. It, so if you're just trading it for short term, just follow the hype. And is one better than the other? It's hard to say. They're penny stocks. It's not anything that you will put your money into long term. Or if it is, I will pray for you. But that's just my thinking behind it. And you have to really follow that stock and know what's happening to it, because the penny stocks. I don't know what's happening around it. I don't know if like there's some group that's gonna hype it up like Wall Street bets, but you have to be very careful with it. If you in asking between the two, based on patterns, it'll be UEC, but it just looks like the better pattern of the two. But if you're gonna plan on holding them long term and planning on putting some serious money into it, no, I'd rather you not. But that's all your choice. No, this is just my advice. You could do whatever you want with it, and there's no right way for it. But if you have money to throw away, for sure, take a gamble. Who knows? Maybe I could be completely wrong, and this thing goes all the way up to like 400. But just keep in mind they're penny stocks right now. Yeah, just do your research into it and make sure it's a stock that you know. For me, I don't follow penny stocks, so I probably can't give you the best. Uh, it's, uh, let's see. Stock that I've been interesting in is cat. I keep betting on that it's gonna fall because it's just so high up right now. It hasn't dipped, and it's slowly just hugging three this 230 level. And it's just slowly hugging us, slowly inching up, and this doesn't seem like there's that much strength in it anymore. So I want to see it fall. I have a position started. It cost me basically nothing. Um, like $300, basically nothing to me. Um, so I'm hoping this thing falls, and that thing fall harder, because I have some puts on it. Not anything much. I think two. 220 would be okay with me. If it can continue to fall more, maybe 200. I would like to see it fall that to 200. Be really good. If we're lucky, get to 180. Still be the thing is, if it falls to 180, it'll still be in the healthy range of things, the range of the movement up. You know, because we've seen this thing fall before, Caterpillar. We've seen it fall before, and it much deeper falls than what I'm already projecting, and it was completely healthy for it, completely healthy for the stock. So, want to see it continue to what it will do. Just have to be patient with it. Can't rush a trade. It could be next 6 months or something. It could take that long to just develop. Okay. Let's see. That's pretty much it for all the stuff that I'm in. Now let's look at my list of really really good stuff to get into. FSR, another EV play. Pattern still holding. Let's see. EN EMPH. Looks like that stock has been running. Long term, long term has potential. Uh, by by the dip. Uh, if you were looking for long term, you probably should have gotten in already. But now is not a bad time too. It's actually a really good time because it looks like it broke its downward pattern. You see this pattern right here. If I were to draw it out for you, right? So this pattern right here, and this was the break above there, right? So this broke this downward pattern. So now it's still pretty good time if you believe in this long term. I think it has some potential. The stock seems to be doing well. It started to really take off in 2019. So this monthly chart, right, slowly started to take off in 2019. It just kept going with it. So I mean, to me, that's a really good sign. And if it falls, this is a, this is a stock that I would keep an eye at. And so if it falls like 60 or something, I wouldn't consider that a bad thing. I would still consider it pretty good. But just know that it could fall that low. If it doesn't and it holds this level and it keeps going, this is a really good area to get in. If you get in right now, um, maybe set a stop somewhere at 150. So $20 risk. Um, so in percentage wise, you always want to look at the percentage wise. Don't just be focused on the dollar risk. So I'll stop somewhere in so it's a $20 risk, $20 divided by 175, 11% risk. So just know that it will be 11% risk if it drops from current market all the way down to 150, and position yourself that it's not a huge chunk of your um, portfolio when it does come back and retest 150 or it goes below 150. But if it can hold above 150, I think it has potential to continue going higher. You can see, the highest all-time high was 230. So if it can hold above 150, I think it has a really good chance of going back and testing these highs again. But it's not going to be an overnight thing. Um, a projection is probably maybe middle of September if everything goes well. If not, it could be longer. It could be all the way until the end of this year before we retest these highs. So uh, right now, if I were to project this out, my thinking is it could be the middle of September before we see it retest these highs. But that's just my thinking. It could be a lot sooner, or it could be a lot further out. But just get into a position where you can safely get out if the stock falls to 150, and just control your risk that way because you don't know what it's going to do. So hopefully that answers your question. gives you some clarity. I know I don't. I'm not gonna give you a straight up, hey, is this a good buy or sell? Because that's up to you, and that's up to how you trade. The only thing I can tell you is to control your risk and to plan for things taking longer than you think. Right? Being a trader, we don't deal with absolutes. We deal with situations that could happen and having a plan for it. And so hopefully you start thinking like that, and just thinking of all the cases that could happen, and if you have an answer for those cases. And if you do, then it's a very good thing. So hopefully that's helpful for you. Okay. FSR was the last one we were looking at. I think it sort of level out on this fall, which is a really good thing. So if you are a EV person, I would consider this a really good buy area for FSR. So Fisker. Uh, I've already started my position in it, and I started a lot higher, but I don't think it's going to be my final position. I only have 300 shares in it, but I sold put to get into it. So um, my cost average is somewhere in this like $17 range. But if it falls even lower, I plan on buying more. But I'm a EV person. I like EV, and I think it has a place in the future. So this is a speculative play again. Uh, high high chance of it falling through and not going anywhere, but also a very good chance of it making a lot of money, a lot of returns in the future. Um, so keep in mind, keep that in mind. It's not something that's going to be a given because EV just started and it's already a leader. The leader is already Tesla, and now we're just picking stock that could be second, third, fourth place. And so hopefully, this is one of them that will rank in the top five in the future. So the potential is there. Um, this is another American EV, so that's also a good thing for it. There's no economical data for it. Pretty new stock this one. So high risk, high reward. This is a very plug. I actually really like plug. Um, it's at a point where it's low. I mean, I really like the technology, because it's another portion of the puzzle, right? EV is gonna need something for to power it up, right? Plug is one of the solutions. Um, I'm actually not in plug yet. I'm in ChargePoint, where ChargePoint is sort of the same technology. I've done a little bit better of a bounce. I'm in ChargePoint, which is kind of related to what Plug does. So Plug or ChargePoint, it's really up to you. Um, so for me, I like both of them. They're both something that will go along with the EV hype at the moment. It's just another component to that whole puzzle, right? So you have to think of economies, right? How that economy will work, the EV economy. There has to be an answer to how they charge things. There gotta be an answer to um, like the technology of EV, right? The fuel cells, right? And if we even go down that route, you might even look at what is it? We might even look at the materials, right? Material sector for nickel and whatnot, because that's used in the batteries for EV vehicles right now. And so, with if there is a shortage in nickel, it's gonna for sure increase the price of any stock that is related to the mining of it. Unfortunately, I don't know of one. Or if it's LI. LI is another EV too. I don't know any. But it's something to look into. Um, we see a sector like that booms, it's gonna take a lot all the related stuff up with it. Just another way of thinking about it. Thinking of what else can I play? My goals list. A lot of the list. A lot of the stuff on here is really bouncing back. A lot of good stuff for long term. YNDX. Still, they've been really stable for a number of years. ALC stable. It's a new one. Unity really low right now, taking a beating, but it's leveled off. It's bounced back. ABC. This one is starting to take off. T-Mobile, range bound, but this one might dip. This one, XLNX, this stock actually took off the last few days. You see how it made these higher lows, and it just took off. I got in. Timing was a little off. I got in around the 130 mark right here, which I should have got in lower when I saw it starting to level off here. But man, it really took off. So it broke this pattern. This pattern right here. Let me draw it out. It broke that downward pattern. This one, the last 2 days. So when it broke that one, hope is it's gonna just continue going higher. But it's never gonna go up in a straight line. It's gonna go up a little bit, come back a little bit, go up again for more. Long term, we're looking for this to continue to go even higher. Just take off. I want to see it break 155. It's 155 all time high. Set new all time high. Looks like this is just like the start of it too. I think for the next year or two, it's probably gonna run, and hoping this thing goes up and like takes out 220, 240. But we never know how high these stocks are gonna run. So when they do catch some traction, it's really hard to just reverse it. You know, so never fight it. If you see it going up like this, like you see this right here, it just kept going up. That was like 2 months. But if we look even further, right, it really did start it all the way back in May. So for this one to start up again, we don't know how long it's gonna go for. Could be 6 months. Could last a month. Could be 6 months. Could be 2 years. Just gotta keep on with it. Pepsi. Pepsi. I was reading. I was looking at some a documentary on uh, Warren Buffett, and just one of the ways he was thinking, and it wasn't Pepsi, but it was Coca Cola. Coca Cola. He was CEO, and he put it was, yes, it's a boring stock, but the way you have to look at it is that company sells 1.8 billion drinks a day, and if they can make just 1 cent of profit, that's $18 million a day that they're making. Now that's a huge for us normal people. That's a huge, a huge number. 18 million. That's probably take a lifetime for us to make that. But yeah, big companies they make it right. That's how they keep going. You know, something like Coca Cola isn't excited or exciting. You don't see that growth in it, but it's worth holding. Right? Eventually, over time, it does grow. You get that big, it's really hard to continue growing at a rate of these newer companies. And So if you guys are looking to invest in something stable like Coca-Cola. It's a good thing. It's not gonna grow fast. Just know that it's not gonna grow fast. It's gonna be stable. Your money's gonna be safe. If you know ways to play it, you can make money per month too. So just another way of thinking about it. There's multiple ways to make money in the market. You don't have to be a penny stock trader or a day trader to make money. If you know how to look at it, there's money in it. J&J looks like it's finishing its dip right now. So if whoever is interested in buying J&J is not going to be a fast grower. It's not going to be a fast grower. It's going to be pretty slow up. PPG, very slow. This is on my gold watch list because these guys are really slow. Really slow. You park your money in it, you walk away, and you come back in a few months and hey, I'm up a few dollars. More stable plays. Not anything too excited. What am I? My other watch list, I have a whole bunch of huge range of things that I look at. Really speculative plays all the way to the really stable plays. And there's a rumor this week that I don't know if you guys pay attention to the news, but there's a rumor that Amazon might split, which is a good thing. It's bittersweet because if it splits, it becomes more affordable for the average person, but it also grows a lot slower. So it's bittersweet. As a shareholder, you get more shares, but your shares might also grow a lot slower. So it's bittersweet. Things like Lockheed is slowly growing. So good pickup. It dipped. It's a good pickup. This is a defense stock. Slow growing. This thing is gonna just truck away. I think it could eventually come back to the 340, 350 range. That could be where you'll pick it up. Costco. More speculative plays all the way down here. USA, NMDM. This is another 3D printing relay stock. MNDM, penny stock. I don't follow too much on it. I just know that it was hyped up this year and it went crazy. And if you are a big factor of the momentum trading, it could be you want to sort of almost get in before the hype. So it hasn't broken its downward pattern yet, but maybe on its next swing low, see if it'll take out this low of 650. If it doesn't, you might be a good area to start picking some shares up. Some penny stocks, POWW. The only penny stock that I kind of have right now. So have some reason behind your trades. And I know it's not going to be a long term trade. It's also a really small portion of my portfolio. I think like all of it is probably less than less than $3,000 for that position. So basically nothing to me. DU, DOU stock, Chinese game streaming stock. Right. RVP. I like the pattern of this penny stock, especially on the weekly. Look at the weekly. And if we make the guess that it's gonna hold this level right here, this the support here, could potentially take off again when we test 20. If not, maybe set a stop somewhere down here, $9, right below $9. Let's watch it take off. So calculate your loss. stay in, put your stop in place. Who knows if it goes down, you take a small loss. If it goes up, you could be winning big. So set your stop on it. But all right, we approach on the hour. So I want to thank everybody for joining me today. We had a little issue with the live stream on Facebook, so I had to move everything to YouTube here. But thank you everybody for joining me tonight. I hope that you guys are learning. I know this is just my style of looking at the market and what I play and the decisions that I make when I look at the stock. But I hope that you guys are learning. It helps you guys make some or ask yourself how are you looking at the market also. So hopefully you guys are learning and um, continue to join me. But let's end it here. Have a good night and thank you everybody for those who did join me. Thank you everybody. Have a good one.